Today, we're diving into the most controversial housing proposal in decades, a 50-year mortgage. Politicians say it'll make homes more affordable, but I'm going to show you exactly why the loan could rob you of equity, freedom, and generational wealth, all while pretending to help you buy a house. Here's the promise. Let's use $400,000 loan, 30-year mortgage at 6.2%. Estimated monthly principal and interest, $2,450. 50-year mortgage at 6.7%. Estimated monthly, $2,315. Monthly savings, $135. Extend your mortgage to 50 years, and boom, your monthly payment drops by around $120 to $160. That lower payment helps you qualify easier, especially with home prices near $415,000 and 30-year interest rates hovering at 6.25%. Sounds like a lifeline, right? But let's do what they don't want you to do. Let's follow the money. Let's say you take out a $400,000 mortgage with a 30-year fixed at 6.2%. You'll pay about $482,000 in the interest over the life of the loan. Now take that same loan over 50 years at 6.7%, and your total interest cost jumps to $989,000. That's $500,000 gone. You don't own more house. You don't gain more value. You just pay more for longer. Here's the real danger. A 50-year mortgage builds equity slower than molasses in January. After 10 years, a 30-year mortgage may build around $160,000 in equity. The 50-year, just $113,000. After 20 years, you could be sitting on half the equity compared to a traditional loan. And what happens if the market drops? You're underwater, stuck with a home you can't sell, can't refinance, and can't afford to walk away from. So why is this even being proposed? Because affordability has hit a wall. The average American household now spends 39% of monthly income just on their mortgage. That's above safe levels. So instead of fixing the real problem, like not enough housing supply, high construction costs, or zoning restrictions, they want to give you a longer loan, which makes it look like you could afford more, while actually just stretching your debt out further into the future. Let's talk about something that nobody wants to think about: retirement. The average first-time buyer today is 40 years old. A 50-year mortgage? That's debt until you're age 90. And the average US life expectancy is about 75. So let's be honest, most people won't even live to pay it off. Instead of passing down an asset to your kids, you could be leaving them a mountain of debt and a home they have to sell immediately just to break even. And what if you want to move? Most people don't stay in a home for 50 years. They move in 7 to 10 years. With a 50-year loan, your equity at that point is so low, you might not even cover the closing costs when you sell. That means either bringing cash to the table or getting stuck in a property that's bleeding your wealth every single month. Look, I get it. Buying a home feels impossible right now, but the 50-year mortgage is a Band-Aid on a broken bone. Here's what buyers are doing instead. Pay down other debts. Knock down your car loan, student loans, or credit cards to improve your DTI. That can help you qualify without needing a longer loan. Consider a starter home. Get into something smaller. Build equity fast with a 30-year mortgage, then upgrade later with leverage. Buy down the rate. Use seller credits or your own funds to lower your interest rate on a 30-year mortgage. That reduces monthly payments and total cost. Treat the 50-year like a 30-year, only if you must. If it's your only option, make extra payments every month, as if it was a 30-year. That helps you build equity and dodge the long-term debt trap. But this requires serious financial discipline, no skipping. The 50-year mortgage isn't a solution. It's a symptom of a broken system. It sacrifices long-term wealth, generational stability, and financial freedom, all for a short-term illusion of affordability. You don't need longer loans. You need better strategy, smarter decisions, and someone in your corner who actually tells you the truth. If you're thinking about buying and want real, honest advice, not just hype, but data, strategy, and options that protect your future, let's talk. Drop a comment, hit that like button, and subscribe for more breakdowns like this. I'm Kevin, your Orlando Realtor, and I help smart buyers make smarter moves. See you in the next one.